Alright everyone. Let's get tonight's live stream going. So this one's going to be a bit short because again, I don't have too much to talk about. I mean, it is the end of the week tomorrow. And as you guys can clearly see and read in the title, we have OPEX. So yeah, let's get right into it. Hey Joe, what's up? What's up? Hope you're doing better. Hey, thank you, man. Yeah, I'm doing a lot better. I feel great. Thank you for letting me. Thank you for asking. But yeah, thank you for thinking about me, man. Thank you. So, as you guys can see, today we had some pretty tight and choppy action, which is actually very, very good, and very. I mean, on average, that's what occurs before we see OPEX, right? And even on the day of OPEX, which is tomorrow, every third Friday of each month, we're probably going to see a lot of volatile price action as the price today was waiting for that, right? It's tightening up. It's gathering that energy to release tomorrow, so that we can get that really good range of prices moving up and down in one single trading day as we get OPEX. Now, you guys should know what OPEX means by this point. If you guys don't know, Google's your best friend. So as all these contracts expire simultaneously, it's imperative that you guys understand that most likely tomorrow we could be seeing a down day. That's exactly what we see in OPEX. But however, there is a slight chance that we can see an actual squeeze to the upside. Now, here's the reason why. So, with overnight futures right now, as I'm seeing here, ES, okay, this is the S&P 500 E-mini futures, okay, plus NQ, which is the NASDAQ 100 futures, okay, they're both staying pretty strong, which is kind of unexpected regarding that, this week, we kind of started out a little bit, I would say a little bit weak midweek, right? And obviously not Monday and Tuesday, but especially after Wednesday, we got some pretty weakening signs that the price is going to be pulling back very, very soon. And so, as I've said on Tuesday, that I'm going to expect the markets to start setting up, right, to set up for a potential move down by the end of this week that will lead into a further pullback into next week, as early as next week, right? And there is one problem with that though, because again, I'm gonna go back to what I said earlier. There is a slight chance that we can see a slight pump in OPEX, right, during OPEX. And here's the reason why. So I've sent this entire chart, what you guys are currently looking at for the S&P 500 futures, to my members in the chat last night. And so this is what we have. What we have here is basically a typical price structure pattern here. And what I'm trying to tell you guys is that whenever you have a big impulsive move like this, we consolidate, right? So this is the impulsive move is characterized and identified as this long big arrow here, and then we have consolidation, which is identified within this enclosed circle here, this white circle, and then we have another impulsive move up after the first consolidation, and usually that impulsive move up tends to be a lot smaller just visually compared to the first impulsive move up higher, because again, most of the people, or at least some of the people who have been involved in the first impulsive move up are now not involved in the second rally up higher or the next leg up higher, because they've already got the big they've already been participating in that big juicy move from the first big move, and they don't want to give back any profits, and so they're just staying out. And so this is kind of a pattern that you see where we see an impulsive move up, consolidation, impulsive move up, and then consolidation. And currently right now, that's exactly what we're doing, right? I even told you guys that on Tuesday too. So there is a chance tomorrow with OPEX, with the wide price range volatility possible, okay, we can see a nice pump up and then a rejection down as we set up for a broader market pullback into next week. All right, so the only reason why I've been saying to you guys this entire week that I've been preparing for a broader market pullback is that, well, it's imperative that you guys should understand why we need a broader market pullback, right? And it's not just because of OPEX tomorrow, right, at the third Friday of this month, but because of the fact that we are overextended, right? So now, if you go back on SPY, okay, we have a bunch of gap ups that we need to fill in. Now, these gap ups does not mean that we need to be bearish, right? It doesn't mean that we have to go all the way back down, right? But it would be very nice if the market decided to fill in at least the most recent gap up, which occurred from Monday to Tuesday when CPI numbers came out, right? The data for inflation came out, and obviously it was a lot weaker compared to what we expected. So, to me personally, so now I'm going to be giving you guys my own personal opinion here. So take this with a little grain of salt, right? The markets can go higher. Why? Because these gap ups tells us that people are chasing the market, and this FOMO chasing can last for months, right? And people might, on the other perspective, might see it just as a simple bull market, which I see it as in the long-term perspective. But people who haven't been bullish into this seasonality run to the upside are going to be telling themselves, oh my god, I got to get in now, right? I got to get in. They're going to continuously push the price up higher, no matter how many gaps that we have left behind unfilled. So what am I saying here? So in conclusion, all these gap ups does not have to be filled immediately. It can be filled literally 6 months down the line. Screw it, right? 6 months, 9 months down the line. All right, we don't need to care about it. But short-term wise, we need to understand that we need to have some sort of a slight official pullback where we see, at least 2 to 3 trading days of a nice, slow, low volume pullback, right? And so, to me, that makes the most sense to me. Why? Well, first of all, you can clearly see from this V-shaped recovery. I mean, the fact that we have, just based off of the first initial pullback that we got since Q3 started of this year, we have nearly, I would say, like, just visually wise, 75 to 80%. We've already regained all the losses that we made since that Q3 pullback, right? I mean, we're nearly back to August highs. I mean, this is crazy, right? And so obviously this is an immense run up to the upside and a very good reversal back to the upside. And it clearly shows that bulls are in control, long-term and short-term, okay? But now, the fact that we're seeing lower volume, we're seeing the volume dropping here now. The average volume is now dropping after we initially had a nice run up, right? And we started to flatline, and we're now starting to see a slight dip in volume. Now, obviously, that volume is going to jump up tomorrow, okay? I'm going to see that average volume possibly jumping up slightly off of OPEX. And especially the daily volume on SPY will jump because of OPEX, right? You guys should understand why that too. I mean, Google is your best friend there as well. But what I'm trying to tell you guys here is that you know, as we're continuously making higher highs and higher lows. Hey, welcome guys. What's up? Welcome. For the people who are just joining in, make sure you guys watch the recording as always, because again, I've already said a lot of good information that you guys should apply to your own trading and your own perspectives for the end of the week and into next week. So make sure you guys watch since, once the recording is uploaded, which will be automatically uploaded once I finish the live stream here. All right. Hey, 3 likes as well. Thank you guys. Again, if you guys are enjoying the information, if you guys are liking what you guys are hearing, or if you guys don't like it, I mean, that's your own. That's up to you. That's your own opinion. You know, but if you guys are liking all the information that I give you guys during these live streams, make sure you guys hit that like button down below. It really helps with the YouTube algorithm. It really tells YouTube that, hey, people are liking what I'm putting out and what type of information that I'm giving to you guys. So again, thank you guys so much for all the recent support and likes. It really helps. It really gets me going. It really gets me to be motivated to continue to do the work that I do for everyone and to guide everyone in the right path. All right, so thank you guys so much. Now, as I was saying, you know, with this drop in volume, this average volume that we're currently seeing, obviously tomorrow's gonna be that a little upset in volume as we get a little pump in volume, which I would try to think that's not gonna be too much of a significance, because it all depends on how the price reacts tomorrow. Okay, and so I mean, even on Tuesday, I believe I told you guys that the SPY can basically move up to 450 to 451 and then start pulling back, and that's exactly what happened on Wednesday, right? We hit 451.50, which was the literally the resistance level from the early month of August and into the early month of September. So, you know, as long as we continue to use 451.50 as a level of resistance, I think that possibly tomorrow, even if we decide to pop over 451.50, we can see an overreaction above 451.50 and then smack right back down as we head into the close of tomorrow. Okay, and again, you know, it's OPEX. We're gonna be seeing a lot of simultaneous expiration and selling, right? So, you know, it's imperative that you guys really understand that long term, we're still in an uptrend. Okay, just because we haven't filled in the gaps here does not mean that we're really going in for a potential, you know, market correction again, another negative 10% correction, right? In order to fill in all these gaps. Remember, SPY does fill in all gaps 100% of the time, but doesn't mean that has to happen the very next week or the next week. It could happen in the next few months. Again, like I said, in the next 6 months, I don't care. As long as we continue to make a healthy uptrend, right, we should be good to go. And it doesn't matter when we fill in the gaps, it will eventually be filled in. But again, short-term wise, I truly believe that we need to see a solid pullback of at least 2 to 3 days and then consolidation, so sideways movement. All right, but yeah, overall, I think that we can see some sort of a price range being formed between 451.50 to $444 if the price does not break over 451.50 tomorrow and stays above 451.50. Okay, I do not want to see a close over 451.50 tomorrow. All right, this is a major level of resistance that we need to use as resistance, not as a new level of support. Okay, but again, it's OPEX, price volatility. We're going to see an increase in volume too. So who knows what can happen, but that's exactly what I want to ideally see from the markets tomorrow. Does that make sense? Okay, so you know, it's again something that you guys should really try to put on your charts as well, especially this range, right? 451.50 to 444. It's a good range to be looking at for the next few weeks, hopefully, because you know, again, I just want to see an attempt of the price, right? I want to see an attempt that the price is going to be trying to fill in at least the most recent gap up that we made. This monstrous move up, this monstrous gap up that we had between Monday and Tuesday's price action. Okay, hopefully that makes sense. Right? So, you know, again, I want to make sure that you guys understand everything that I just said. So make sure you guys let me know in the chat if you guys don't understand anything, and I'll clarify. Hey, what's up, man? What's up? Okay. So, with that, I want to talk about the other stuff that I want to go over. Okay, the bond markets. All right, so bonds are looking really, really good. All right. Again, I think bonds are going to continuously move up into 2024, and it will probably be one of the easiest long-term trades to have for most of 2024. Right? So I'm not going to say all the up into 2024 because I don't know what's going to happen once we see rate cuts, and I don't know how the bond market is going to react once the Federal Reserve actually starts implementing an official rate cut. But I know for sure that the bond markets are going to start recovering, because we're starting to see that recovery right now. When the bond markets are already anticipating that we're going to see rate cuts into next year, and that's exactly what we're seeing as the bond markets are pricing in that potential for the Federal Reserve to start cutting interest rates in 2024. So, just as a reminder, guys, the markets are now pricing in potentially 4 rate cuts in 2024, and that could potentially increase, right? That could potentially increase. And the bond markets are going to like that, right? Bond prices are really going to love that. We're going to see a surge in demand for bonds as well, okay? And that should also create a lot more higher prices in the next few months for short-term and long-term bonds, right? TLT and IEI, okay? So I sold IEI today. My contracts were deeply in the money. I got 113 strike call contracts, right? So, you guys can tell, right? How deep in the money it is. But I'm still looking to see 115 as the maximum price target. So who knows? Maybe tomorrow I will go back into IEI, depending on how OPEX goes. But again, IEI, I took profits today. It looks very, very good still. TLT, I want to actually add more positions onto TLT heading into next year. I might just reposition my entire portfolio there. To get some more TLT, because this one has a lot of room to recover, right? It could go back to the 100s and even higher, right? Maybe 110s, right? So this can take some time. It will take some time, but I truly believe that we can get back over at least the 100s for TLT. All right. Now, regarding bond prices, right? Bond yields are still starting to it cratered on Tuesday after that inflation report, and it's still it will continue to move to the downside. All right, and if we're gonna use my SMAs here, my entire ideal maximum profit target for a quote unquote profit target for bond yields is gonna be exactly at 4.00. Okay. So why do I choose 4, the number 4 here? Because my daily 200 SMA is currently sitting here, right? So that's all just based on my SMAs, right? But again, this is TNX, this is bond yields. I'm not really tracking exactly the technical analysis for bond yields, but it works. It works. Okay, I'd rather just be looking at a line chart for bond yields, but you guys know how it is. When I look at technical charts, I like to use my candlesticks. So, with bond yields still going down and will continue to go down, I think, bond prices will continue to go up higher. Because why? They hold an inverse relationship. Easy as that. You guys can Google that too. Very easy to understand. And then the last thing that I want to talk about tonight is the dollar. Right, the US dollar, the greenbacks here. So dollar absolutely shat itself the past 2.5 weeks, and I'm glad it did that, because again, if you guys remember, I grabbed a UUP position the day before Halloween a couple weeks ago, and I added again on Halloween. And the reason why I did that was that, again, I thought that the dollar is going to fail this bull flag, and guess what? My instincts and my analysis was correct. All right, so for now, I'm correct. For now, the dollar will continue to move to the downside, and I have further confirmation that the dollar will continue to move to the downside because gold is rising back up higher. All right, and if you guys forgot, gold has a really, really big macro cup and handle here. All right, that spans over a decade. Okay, well, not over. I would say almost a decade, or at least a decade. So the gold here, gold is truly showing me that yes, the dollar is about to show us more weakness, and especially when I start to see gold miners acting very bullishly with an increase in volume, a nice hold of this current short-term uptrend, and this move to the upside, truly tells me that something's going on, right? I mean, GDX itself here, right? Gold miners ETF is showing a very nice inverse head and shoulders here, all right? With the neckline being exactly at this $30 level that I've already drawn here for you guys, okay? And so as long as it's able to hold over the major SMAs, the 10 and 21 short-term SMAs, and then eventually over the 50 SMA like it did today, we should be able to get back over to this neckline of $30 and eventually the daily 200 SMA. Okay, so again, gold is further confirming that yes, I was correct to be short UUP when we're about to transition from October to November, because that's usually when the equity markets bottom out. Does that make sense, guys? Okay. So hopefully, that kind of gives you guys a good perspective on what I'm expecting long-term and short-term in the markets, in the equity markets. But yeah, overall, it was a solid day today. I got some LOY puts because it looks like it's about to have a very nice flush to the downside. It's still a leader, so I have to be very, very careful, especially with adding, because I really do want to add on to LOY puts here. But I do have a very out the money, very out the money strike. I have 500 500 strike put contracts that expire next year. Okay, and now you might be saying to yourself, wait a second, Andrew, it's not that far away. I mean, this thing moves, 15 to 20 points a day. Right? Well, I understand that, right? But since it's a leader, there is a lot of downside risk to my position, right? Because leaders can still continue to move up higher and higher and higher, no matter what the news may be. So, LOY, that is a very high risk position that I have with a very out the money strike. So this is one of those trades that I will be holding on to for a while until it completely negates what I'm looking at. Because again, I'm seeing a bearish hidden RSI divergence here. Okay, on the daily and even on the 4-hour and 2-hour as well, right? So the RSI is showing lower highs, and even before we made this third lower high, the price made higher highs. So even if you're looking at the lows, right, we're making higher lows while the RSI is making lower highs. So that is a clear bearish hidden RSI divergence. Okay, so that is the number one reason why I got into this one, and all the hourly time frames look pretty bearish to me as well. All right, so that's the one position that I really want to tell you guys about, and a stock that you guys should be looking into for a potential long is you. Okay, so you is I feel like I'm talking about you guys, since the ticker symbol is you. So what we have here is basically a very nice recovery from lows. It almost made all-time lows again after earnings reaction, but I love the fact that we're still respecting the daily 50 SMA. We're not immediately rejecting and flushing to the downside. Instead, we're starting to consolidate, right, this entire move up higher from earnings reactions lows. And so as long as we're staying over $28 and using $28 as a new support level, coinciding on top of the daily 10 SMA, we should be seeing a nice big move back over to 31.50 and eventually back to at least minimum $33. Okay, and that's also where I would expect the daily 200 SMA to start kind of flatlining at $33. And currently right now, the daily 200 is slowly curling down, trying to catch up to the price. And today it closed at $33.39. Okay. Alright, so U is definitely something that you guys should be looking at. This is a good ticker to be looking at for any nice upside sharp moves or just an overall reversal. And yeah, oh, that's right, IWM. So I grabbed a starter position on IWM again because last time in the first one, I ended up taking profits a little bit too early, even though I was looking at 180. But I really didn't expect small caps to have, you know, a 5.50% day in one single day. All right, 5.50% percentage gain in one day. Whew. That's big. That's big for small caps, right? So I mean, even the following day, we nearly had what? Let's see. Let's actually do the. Yeah, we almost had a 2% move, right? In the following day, right? That's another big move. So, you know, with this rejection at the daily 200, and now that we're back below 180, and now today, we were starting to respect 176 as a new level of support, I started a new position on IWM because I want to see if 176 continues to hold and if the price continues to move sideways so that we allow the 10 and 21 SMAs to catch up, especially this 10 SMA. So at some point, the 10 SMA should continue to curl up higher and coincide with 176 to allow the price to jump back up and head back over 180 eventually, right? So I will slowly add back into that position because again, it's a starter position. Or not add back. I'll slowly add into the position, and yeah, I'll let you guys know. And if you guys are thinking that IWM is too or a little bit too expensive for you guys can look at UWM. This is the 2 times leveraged ETF for the Russell 2000. Okay, so this is another good alternative to be looking at. Same thing here. UWM, $29 is practically your previous resistance level that will need to turn into new level of support. So previous resistance into new support is exactly what we want to see in a textbook uptrend. And again, UWM also has an inverse head and shoulders, just like how I have highlighted here on IWM. Okay, so that's pretty much it. I mean, you know, hopefully tomorrow I start to see the setting up of that potential broader market pullback for, you know, as we use OPEX as a catalyst, and we'll get that alley-oop on you know, as early as next week for a nice pullback, right? So that we can confirm that yes, tomorrow was the or I guess Friday was the actual setting up of this potential pullback, right? The very much needed pullback. All right. All right, so that is it for tonight, guys. Hopefully, you know, the live streams for this week have been very, very helpful. You know, make sure you guys watch the Tuesday's live stream to understand what is really going on in the markets, and also watch this recording as well if you guys are just joining in. But if you guys are watching the recording right now, and if you guys have made it to the end of this recording, please leave a like down below. And if you guys have any comments that you guys have to say about my analysis, or if you guys have any opinions that differ from my own analysis and opinions, please let me know down below, and I will gladly read them and gladly conversate with you guys. All right, so have a great rest of your night. Good luck tomorrow, and hopefully I will see you guys next Tuesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Thank you guys so much for watching, and have a great rest of your night.